All right, here we go. So you guys can see my screen. So today's session is just about equity, mostly just long-term equity. I know a lot of people can't trade every single day. You got 9 to 5 jobs and can't pay attention to the quick scalps in and out and everything. So we just wanted to go over a little bit of how we play equity. Ricky will go over some of his picks later. I'll go over some of my picks. We have different styles, but obviously they both work. Let's see. You guys just pick which style you like, and you can follow both. You can try both and see which ones work for you. But I just want to go over some of my favorites and how I go into trades in equity. So options are completely different. In options, you want to play, especially short-term options, you want to play the momentum names. There's so many people in premium voice channel. Ricky, you got a message in the Discord. They're in the wrong channel. People can't read instructions. Okay, but yeah. There's like 6 people in the premium voice channel. I don't know why. But yeah, so what I want to talk about options, obviously momentum, news, volume, very, very important in momentum, especially if you're taking short dated options. You want that momentum there, right? If you're taking calls, you want a lot of volume coming in. You want some news possible. You want some quick spikes, quick movements, right? Equity is completely different. So I have on my screen here Palantir. Palantir is one of my favorite companies. It's my second largest holding. As you guys well know, I talk about it every single day. I love this company. I've done the research. I've looked into the financials. I've looked into their data company, what kind of contracts they have with the government. So fundamental equity long-term holds, you want to be sure about the company. In options, I trade a lot of companies that I don't even know what they do. Honestly, I know the ticker, but I don't even know the company name. It doesn't matter to me. Volume, momentum matter to me in options. In equity, I'm holding it for a long time. Basically, it's something that you could hold for 3 to 5 years and not be worried about. The reason being, when the market dumps, you need to know what you're in, especially in equity. You need to know exactly what you're in, or else you'll get scared out. You'll panic. You'll see red on your screen day after day, and you'll get worried, right? So for equity, I want you guys to look at balance sheets. You need to look at the news. You need to look at the management. You need to look at what's the growth potential. Year over year revenues is very important. So that's another thing. Like I told you, me and Ricky have different styles. I asked Ricky some of his favorite long-term plays, and a lot of them are blue chip companies. So he's not so worried about growth. He's more worried about safety, whereas I like growth. So like, for example, Ricky loves Amazon, right? He loves Amazon equity. He wants to take Amazon equity for a long term. I do not want Amazon equity at all. I'm not interested in it at these levels at all. The reason being is, imagine the move that Amazon needs to make to go from 3,500 to 7,000, which is a double, right? So 3,500 to 7,000, the market cap's already like 1.5 trillion, maybe almost 2 trillion. So the market cap would have to go to 4 trillion in order for that to happen. Can Amazon double its business quickly? It can, but at the same time, what are the odds that Amazon goes to 8,000 within the next 2-3 years? It's very low, okay? Amazon can go to 6,000, 7,000, but it's going to be like, it's going to take big moves, right? The reason I like my strategy more is because I'm into growth names. It's much easier, in my opinion, for a Palantir to go from 25 to 30 in a year than it is for Amazon to go from 3,500 to 7,000. It's much easier for SE to go from 150, where I was calling it out, to 300 in a year. And if you don't believe me, just look at the chart of SE. Called it out at 150 back here in October 2020. In less than a year, we were sitting from 150 all the way to 360. So instead of gathering dividends and being safe in FANG stocks, I would rather pick high growers, look into them properly, look into the fundamentals, look into the growth year over year, look into what's hot in the stock market at the time. And I'd rather take a bet on those instead of buying an Apple, which would go from, if it went from 150 to 300 here, it would take a $2 trillion market cap. Adding $2 trillion to a company is not easy. It took this long for Apple to get to a $2 trillion market cap. What do they have to do in their business to double that market cap? A lot, in my opinion. So that's why I'm not interested in the Apples, the Microsofts, the Facebooks. Well, Facebook's still undervalued. If you look at the balance sheet, Facebook is still undervalued, in my opinion. Google, all these companies are $1 trillion companies. I want to find the next company that's going to be $1 trillion company, or the next company that's going to be a $50 billion company. So let's just start off here. I'm going to show you guys Palantir. So let's say you guys want an equity position, okay? You guys want to take an equity position in Palantir for the next, and you have to know your time. You have to know your time approach to Palantir. If you're buying equity and Palantir, you buy Palantir at $25, okay? I think I was calling it out at $22 back here at earnings. That's when I started my equity position in it. $25, you're buying Palantir. If it goes up to 35, what do? If it goes down to 15, what do you do? Okay. First thing you need to know is, what is my time horizon on this trade? Do you want to hold it forever? Do you want to hold it for 5 years? Do you want to hold it for 2 years? Do you want it in a year? How long do you want to hold it? The third thing you need to know is, you need to know the company in and out. You need to know management. You need to know balance sheet. You need to know their growth. What are their revenues? Are they 30% year over year? Are they 40% year over year? Their user growth, their current clients, do they have government clients? Do they have one big, imagine like you're buying a company and they are making 1 billion a year, right? 1 billion this year, and they're projecting 5 billion next year. Okay. Why do I say you need to know current contracts here? If they only have one client that's paying them 1 billion this year and projecting 5 billion next year, what if that client leaves? Right? So their whole business would be done. What contracts do they have? In terms of Palantir, they have a ton of government contracts, which is always solid. They have CIA contracts, they have FBI contracts, they have National Homeland Security contracts. Are they in a hot space? Okay. So like Ricky said, Ricky likes Pepsi and Coke and stuff. What really is Coke and Pepsi how are they gonna innovate? How are they gonna get their next branch of revenues? Palantir is a data storage with security that no other company can match. So that's why I love Palantir. That's why the government keeps giving they have Homeland Security contracts, for God's sakes. Okay. Think Pepsi versus data cloud. Okay. Cybersecurity, for example. Another big sector ready to rip. What is the future? If COVID stays, vaccines, right? What else is the future? Cybersecurity, we got vaccines, data clouds. Cloud is completely way above. Web services like Amazon Web Services, Microsoft gaming is in the future for sure, if everyone stays home. Stuff like that. If you guys have any ideas on the side, you can pitch them in. Just write in the chat here, and I'll tell you what I think. I don't think, for example, fucking GameStop is the future. I don't think people are going to be buying used games from GameStop. Genomics, yes, genomics. That's a good one. Most of my companies that I'm going over today are genomics, a lot of them. E-commerce will always be hot, especially in a COVID world. What else? Healthcare in general, absolutely. But you guys see how T-Doc acts. DocuSign. You see DocuSign is going to be huge because people don't want to leave their homes. AR and VR, virtual reality, is going to be huge. You guys have to think outside the box here. Weed probably in the future. Semiconductors will always be massive, very good there. So we'll just go over some of my favorites in these sectors here. I think that's enough. And I want to show you guys how I would buy them. So first of all, you're going to think, why do you like this company? Why do you like, yeah, solar is huge too, but I'm not going to go over solar. You guys know solar. I'll go over a couple, whatever. So first thing you have to know is, what's your time horizon on this trade? Do you want to hold Palantir for 1 year? Do you want maximum gains for 1 year? Do you want maximum gains for 3 years? Do you want to hold it for 5 years? Yeah, EVs. I love Lucid. That's all I'm going to say. If the stock market dumps, you should know your company well enough to the point where that you can hold it through that red. If you know a company in and out, if the price comes down, it's just an opportunity to buy. The price does not matter. The price is just to scare you or get you excited. Price only matters on companies you don't know what they do. If you know the management, you know how long you want to hold it. Every single dip, you just look for entries. You look for more. Exactly. SEC Limited was one of the ones I loved it. Like, I completely loved it. At a point, I had so much C Limited that I would feel sick if it was down 2% on the day. That's when I knew I had to trim some. So here's another thing I wanted to show you. When you do all this research, remember guys, this is not easy. You can't just like show up, watch us, follow us, and then make money. Like, you can, but at the same time, this is a lifelong skill. We're teaching you guys something to become financially free. And the more work you put into it, the more results you're going to get. You can ask anyone. You can go through our testimonial page, see how much people are making. They watch the sessions, they put in the work, and they make the money, okay? And another thing I wanted to talk about, let's say I did the research on Palantir. I love it. I love it completely. And I want to build a $10,000 position in there, let's say. Or let's make it 9,000 just to make the math easy. $9,000 I want to put in Palantir. And I want to hold it for 3 years. Okay. This is what I'm going to do with this right here. Instead of just blowing my load, going the next day, buying $9,000 of Palantir and just letting it sit for 3 years, I'm going to take that 9,000, I'm going to split it into three different buys. Okay. And if you like a company, this is what the stock market does. So the stock market, like Palantir ripped today. If you wanted equity, you were going to panic and you were going to buy it right away. That's not how you buy long-term equity. Options are completely different than equity. As I told you before, options would be fine to play that 2750 break. But for equity, what I want to do is I want to open up a weekly or a monthly chart. Okay. I want to open up a weekly or a monthly chart. And I want to see support. Where is the support on the weekly or monthly? Okay, and then I want to put in a buy, a limit buy for $3,000 worth of Palantir. Now, where do I want to buy it? Let's go over some key supports and stuff. So first thing I'm going to look at is the monthly. All right. We go to the monthly. Since it's a newer IPO, this is really hard, but we'll try it anyways. So monthly, we have the monthly open here. I'm going to put a little horizontal line just at these wicks. Where are most of the candles touching here? Down here at 21.15. Okay. Just because Palantir broke out today does not mean it will not come and retest this. It doesn't mean that it has to, but it means it might. If SPY dumps, if the market dumps in general, all the stocks that you love, they will come down. They always will come down. Some will come down more than others, but they will all come down if the market is weak. I need some water, Brad. Bonnie, okay. And yeah, so watch this for this session to post afterwards. You're direct messaging me. Can you just message everyone? Yeah, I will. That's what we're doing here. So what I will do for Palantir, I already have some at 21.15, but 21.15. You see how we the bottom in December was 21.15. We touched 21.15 in March. We touched 21.15 in April. We touched it again in May, July, And in August, we almost touched it as well. All right. So thank you, bro. So what am I going to do here on Palantir? Entry wise, I have beer. I'm jealous. So entry wise, what I'm going to do is I'm going to split it into 3 different buys. I'm going to put $3,000 worth of Palantir. What is going on? Yeah. $3,000 worth of Palantir at 21.15. All right. And if you really want it bad, put a little 5 cents, put maybe 10 cents above. And I'm going to put a good tell cancel order. That means that order will stay there no matter until you cancel it, it will stay there. And if it gets down there, it will. And trust me, I've been through this. When the market dumps, a lot of news will come out that the world is ending, and you might change your mind. That's why I'm telling you, put in limit orders for good tell cancel. Because when SPY takes a dump like it did in COVID back here, these stocks will come down quickly and fast, okay? Let's just take a look. Let's say you liked NEO long-term. I don't know why you would, but let's say you liked it. Where's March last year? Right here. So imagine we had a monthly limit order on NEO because it touched this line so many times, right? At 39.39. This is just an example. I'm not telling you NEO is good. Beam and P and G. Yeah, I will go over a bunch of stuff, don't worry. So you see how it touched this support here so many times since last December. I would have put in a good tell cancel limit order. You see this massive dump during COVID. So many people would have canceled this limit order. That's why I'm telling you, put in the limit orders right now. And what will happen is they will fill automatically. You'll get the rip that you want, and then we'll talk about how to manage it. So that's the first third you want to buy is that monthly support. The second third that you have, the 3,000, you want to buy if it breaks down even more. And the third is just for insurance. If it keeps going down, that's your third buy. And under that, if you're completely wrong, then don't bag hold. You should have a stop loss under there. So let's say I got really into Palantir. I loved it. I looked into everything. And I bought it through this breakout right here. Okay, this little bull flag breakout right there. I bought it at 26.40. Okay, 26.40. I bought it, held on to it. I'm like, oh, this is going to the moon. It went straight to 45 after. I'm a genius, right? I didn't sell any. I think it's going to $100. It's the greatest company of all time. I can't believe what a great trader I am. And then all of a sudden it comes down. It comes down here. I dip by more. So now my average is around $28 because I bought at 26 and then I bought at 30. The last third is insurance. Look, it keeps coming down, keeps coming down, keeps coming down. We come back to the monthly support that I was talking about around 21. We add there, and then I would put my stop loss under this candle right here, just in case I'm wrong. You guys get what I'm saying? So I bought at the breakout, thought it was the greatest company, chased it, $26, went all the way to 45. Obviously, I'm not going to take profits. It went up way too fast. I'm way too smart for that. My company is great, you know? And then it comes back down. It comes back down. I average down way too quickly because equity plays are long-term plays. Never rush into equity plays. And then it bounces up. Oh, I'm a genius again, right? I added. Now I have a bigger position and I'm up again. And then it just completely dumps on me. That last third is insurance. That's where you want to buy when you think it's the absolute bottom. And usually the absolute bottom is near that monthly support until it shakes you out. So if I was in Palantir, I have a 3-year time horizon. First of all, I'm buying the 3/3 within the same month. This is a daily chart right here. I bought here, and I bought here. So that's completely wrong. You're buying it in the same month. It's a 3 to 5 year hold. Why am I buying in the same month, right? I bought Palantir equity back here, and I haven't added yet. So I'm waiting. If the market gets weak, this is a real life example. I bought it on earnings day when we dumped through that support. I knew it was a flush. I'm up like 20% on my equity, I think, right now. And I haven't even added my second third yet. Why haven't I added my second third? Because I still think a market correction is in the works. I mean, SPY looks like this, right? I think the market will correct either this month or next month. And when it does, Palantir will correct with it. And if we get lower lows, I will call it out in the group. But what I'm looking for on Palantir is I want another retest of 2115. We could completely come back down and retest 2115, where if I think it's the bottom there, I'll add my second half. And my third half will just be sitting there. So that's how I approach buying equity. I'll do another real life example on Ugrow. So Ugrow, I was wrong at the entry. I got in too early. It took a long time for this one to play out. I know Dave knows this one very well. We bought around 10 bucks, I think. We bought around 10 bucks and we just kind of squiggled around forever. When was this buy? It's hard because this little pop-up from the NASDAQ always gets on my screen. But we bought around 10 bucks and it just kind of went sideways for months and months and months. I never had a doubt in the company. I looked into the financials. They had a great financials. They had great management. It's just that no one knew about them. So we bought around 10 bucks and it stayed around 10 bucks for like 6 months maybe. And then it finally broke out. All right. So finally, after months and months, I knew I wasn't wrong. I had the financials in my hand. I knew I had the management. I knew what they were doing. I knew they're a strong sector. Weed. They actually do the farming for weed kind of thing. And what their financials were great. They were growing massively. They had a shit ton of cash on hand. So I knew I was right. It was just a matter of time. So I just kept holding my 2/3 position that I have. Still have a third to add. But another thing I want to say is if you're in equity and you get if you get 50 to 75 to 100% move quickly, take some off. Let's say I got 10,000 in that stock. Oh my God, I don't know how you draw in here, bro. All right, so that was the entry. I'm gonna say another thing now. This is what it was. So let's say that same $9,000 is what you want in the stock, right? Let's say I buy $9,000 of a stock at 10 bucks, like Ugrow, for example. So when I have 9,000, that's my base. That's how much I want in there, okay? When it's at 10 bucks, it's $9,000. Now, when it goes to 20 bucks, my total position is 18,000. I don't want 18,000 of my money in that same stock. So what will I do? I'll sell half my shares. So if I have $10, so I have 90 shares. Wait, 900 shares. I have 900 shares at $10, which equals $9,000. I will sell 450. And then I will still have $9,000 in that stock. So I want that position to be $9,000. So if it goes up, I will cut whatever I need to cut to keep that $9,000 in there. And that time I'm basically playing with house money. So that equity is completely free for me. That $9,000 I just freed up is free for another position. And that's how I approach equities. Other people will tell you just buy and hold forever. We are traders. We know charts. There's a reason we know charts. So that's how I approach my equity buys and sells. And I hope that made sense to you guys. And now I'll just go into some of my favorites and what levels I like them. In case we have a correction, this is where my limit buys are going to be on these stocks. Obviously, number one in my portfolio is SEC Limited, as everyone knows. Monthly chart, super extended. This is why I said, look at the monthly chart. So this stock, in a market correction, look where the moving averages are. The 8-day is at 278 and the 20-day is at 200. So if it ever gets to 200, I will probably put my whole account in there. I'm not going to lie. Never mind risk management. I'm just going to throw my whole account in there. Just kidding. But yeah, so SE. So we got the 20-day at $200 and we got the 8-day at 278. That's way too far. This is a growth stock, but 278 would be a good spot for SE for my first buy. If you guys are not in SE, 278 would be my first buy. And the others, I want to see where you guys would add them. So market completely dumps, everything tanks. SE comes down to 278. Now I have $3,000 in there. If I want a $9,000 position, I have much more than $9,000 in there. But if I want a $9,000 position in SE, 278 would be my first buy. And after that, I don't even need to worry. So I get in at 278. After it dumps down, these moving averages are going to move. Everything's going to be different. You can zoom into the weekly. And the weekly, I can see the 50 days at 243. So 278 first buy, 243 second buy. Simple. That's it for SE. Those are my two buys. Third buy is just in case it dips more. I wait till it bottoms and the market fixes, and then I add on strength when it reverses off support. So I don't add here. I don't add here. I don't add here. I don't add here. I add in this week when it shows me that it's reversing. Okay. So that's my emergency buy that I would add when it shows me that it's reversing to the upside. I don't care if I don't catch the very bottom of this week was 189. I don't care if I catch that. I would rather buy it through 200 right here. 200 solid psychological numbers. So 278. And then I would buy the weekly SMA of 243. And after that, we'd keep that emergency one there. Those are the two numbers that I would buy equity on SE. Palantir, as you guys know, I was buying in this earnings back here. So what am I going to do now? We broke through 2750. If we keep running here, expect a retest of 2750. If this is a failed breakout, we will come back down and test 2115, where I will add my second position. 2115, I will add my second one. And the third position, I will hold it just in case we dip more. And I will buy more at probably 1681, but we have to reassess when it does break that 2115, which I don't think it will do. So we got Palantir. If it rips from here, from this breakout, buy first lot at 2750 retest. If it breaks down, 2115 support, first buy. All right, so that's how I approach this one. Palantir, SE, those are two of my favorites, as you guys all know. Third one I really like for long term is Twilio. Ricky knows this one well. He's used them in the past. This one is kind of tricky because it's run up a lot, right? So we're going to go to the monthly here. I have no position in Twilio, but I would like to build an equity position. This market is overextended. Everyone knows the monthly just closed for the first time. Did we close? No, so the monthly is below the 8-day moving average. The 8-day moving average is at 350. 350, and we're sitting at 345 right now. So if this one does want to break down, it can come down to the 21-day, which would be at 291.50, and then the 50 days all the way down here at 163. So I would not buy my first shares at 290.67. What would I do? I would wait to see how it reacts here, because again, SPY is just straight up in a line. If you look at the COVID dumps on all these charts, where is March? Right here. So Twilio went from 133 all the way to $68 in the COVID dump. It halved. So it almost went down 100%. Palantir, if it rips, it broke through a key support, a key resistance today at 2750 on Palantir. Just open it up. I'll go through it one more time. Palantir broke through a key support at 2750 today. If it runs from here, if it comes down and retests 2750, I would buy my first shares there at 2750. If it breaks down from here and this is a fake breakout, then I would buy my first shares at 2115. But everyone already knows I'm in Palantir from earnings day back here. It's already up 20%. So I'm waiting for my second ad right now. But those are the levels. If it runs from here, 2750 I would hold. If it breaks down from here, 2115 is where I would buy my first shares. Twilio, again, from 133, it dumped to 68. So if you don't believe me, when the market corrects, these stocks correct heavy. You might be watching and being like, oh, this stock's never going to come back down here. It's never going to come back down here. I'd rather sit in cash in my equity account than buy stocks too high and watch them go through the red. So Twilio, if it retraced 50% during COVID in 2 months, imagine if the market turns here. Look how extended it is. Back here, it wasn't even that extended. It was already consolidating, and it still gave back 50%. So right now on Twilio, if I get a chance, my first buy, I will look at 290.67. So 291 on Twilio. If it acts like support at 291, will be my first buy, and my second buy wouldn't be until 162. Again, these are not hard numbers. It depends how badly the market dumps. If it's dumping bad, I know your emotions are going to be involved, but these are the levels. 291. Imagine a stock fell from 350 to 291. That's a what did I say? 350 to 290. That's a 60-point move down. If you're watching a stock go down 60 points, it's very hard to hit the buy button. You should buy when you feel like puking, and you should sell when you are very, very happy and talking about the stock every day. All right, so 291 would be my equity starter for Twilio. If it never gets down there, it's not a big deal. I have 20 stocks I want to buy. One of them will hit, two of them will hit, three of them will hit. I don't even want all 20, right? So 291 first one, 163 second one. This is all based on a correction in the markets that I see coming. It's the same story every time. Everyone says it's a different story every time. It's never a different story. It's always the same thing. 2008, everyone was saying it's different. 2001, everyone was saying it was different. 2001 was the freaking .com crash. Everyone knows internet was taking over the world. The market didn't give a shit. They crushed everyone. Bitcoin could be a real thing. Bitcoin could be the biggest thing in the future. The market still will fuck everyone. I'm not joking. Go look at the .com crash. Look at the companies that crashed in there. Yahoo, Cisco, like they all turned out to be multi-billion-dollar companies now, but doesn't mean a lot of people weren't smoked by them back in the day. So Twilio, we went over. NVIDIA, I have equity in this one pre-split. I'm up well over 89. I think it's 100%. NVIDIA is very, very extended here. I love this company. I think this one's going to be $1 trillion company within the next 2-3 years. But we are very extended. The 8-day moving average is way down here at 185. So you guys said chips were hot. NVIDIA is my favorite chip by far. The number that I would add first on NVIDIA, my first equity buy. Don't be scared to sit in cash, guys. Cash is king. Unless you get good value, that's the only time you should be spending your cash. Most of your accounts should be in cash anyways. So NVIDIA, I would look for my first entry at 143. Believe it or not, that's 80 points down from current levels. And I know Ricky will also load the boat with me at 143 if it ever gets down there. Everyone loves the stock. So NVIDIA 143, good tell, cancel, limit order. And after that, we will see. See how I'm using the 21-day? Stocks like to crash to their 50-day even. That's why I'm saying first buy. You see during COVID, look at during COVID. Where's COVID here? Keep forgetting where COVID is. It's just been so long in COVID, you know. So in COVID, we went from, this is a pre-split, okay? Pre-split, we went from $48 down to $33. So we lost 15 bucks on a $48 stock. What's the math on that? $48 to $33. NVIDIA lost 32%. 32% during COVID 2 months. So remember that. And right now we're sitting at 222. 222 minus 32%. We could go down to 150, it's saying. So why can't we hit 143? I'm just giving you an example. I'm not saying something like the COVID crash is going to happen again, but the market does correct, and it corrects heavy. A lot of the time, these stocks correct much more than the market, especially tech stocks. So if we went down 32% in the 2 months of COVID, if we went down 32% from these highs, it's at 143. That's all I'm saying. So NVIDIA, I like my first buy at 143. That's around my average right now, actually, I think. What other stocks I got? So I got SE, Palantir, Twilio, NVIDIA, and now I'm going to go into genomics. I love all of these genomics names. CRSP. These companies, if they're successful, they're going to cure cancer. I'm telling you right now, within the next 5-10 years. See, I already wrote this down from last time, I guess. If I want 10,000 in it, 3 buys. CRSP, my first buy on this one would be down around, it's actually at a monthly support right now, but the market is really strong. So I would move it down to this support back here. I don't know why I have that. What is this weekly? Let's go to the weekly real quick. Weekly, we are below all the moving averages on the weekly, which is a bearish trend already. So we're looking at a bearish trend here. The monthly 21 days at 107. So 107 is only $10. I have no fear buying this stock at 107 because I would know my time frame is 5 to 10 years on this one, and I would know what they're trying to do. CRSP, genomics company, if they're successful in altering DNA strands, they can cure any disease, almost any disease, leukemias, any other type of cancers, can't even think right now. Pancreatic cancer, brain tumors, heart problems, they can literally alternate your DNA. So say most diseases are caused by genetics. I don't know if you guys know that, but what your parents had usually spreads down to you, or what your grandparents had spreads down to you. And what they're able to do is alter babies' genes so that you don't get the same diseases as your ancestors. So this is huge, huge news. If they're successful, these are going to be the next FANG stocks, in my opinion. They'll all be trillion-dollar stocks if they are successful. Beam, I have already. And if you're not in Beam, it's a newer stock. We can't use the monthly because it hasn't been around long enough. The weekly, I would use the 50-day. I already have a line here, as you see, 82.50. 82.39 is a 50-day moving average. 82.50 on Beam is where I love it. I would love buying it. And if you guys see these stocks, I have buys a little bit closer than NVIDIA and the other ones because I'm so confident in genomics over the next 5 to 10 years. I wouldn't even mind being red in them for a while. What else we got? Editas. So these are all genomics plays. I love them all. I would be very comfortable sitting in any of them. 50-day moving average on Edit is at 47.93. So $48 on Edit would be my entry in equity. That's why I haven't been calling out as many equity plays. I knew I took any with Ricky, but that's more of a crypto play. I haven't really called out any equity ads other than short squeeze plays. And why haven't I called them out? Because the market's right at the top, I feel. It's very close to the top, and we will get a fat correction soon, and I'll get those same equities for 10 to 15 to 20% cheaper than we will up here. That's the only reason I'm not calling out equities. I'm just playing momentum options lately. But when we do get that mess of a correction, I'll be all over equity. I took some NTLA equity today for a momentum trade. It's not a long-term trade. My time horizon on that one is not 3 to 5 years. If I wanted to hold it longer, I would get in much cheaper. The 50-day is down here at around 82 bucks. 83 bucks is my entry on NTLA. So look into these companies, see which ones you like, see which ones you believe in, look into the management, which genomics company you like the best, put in your limit orders for those ones. I'm gonna go into, I do like Crowd and Fiverr. Fiverr is a little bit overvalued in my opinion, but I do like it longer term at these prices. Melly, I love this. Mercado Libre. I think this one's basically a double from here very easily. I think Melly has a chance to double well before Amazon does, which is why I like the equity on this one better. Melly's weekly, we can do the monthly on Melly actually. It's been around long enough, I believe. Do the 21-day moving average at 1335. And these are all growth names. In a market correction, these will dump fast. So 1335 for Melly, if you're interested in Mercado Libre. This is a huge company here in Mexico. So Mercado Libre, I like 1335 for equity. Airbnb, this one, I've been trying to get an entry in it for so long. It's an IPO base, so no one really knows when it's going to go. If it touches 154.50 even, I will start a position in this one just because it's so brand new. It's very hard to tell where Airbnb will go. But in a market correction, I mean, even the weekly moving averages are caught up. Monthly is not going to matter much. Let's take a look if the 8-day and 21-day are anywhere of significance on this one. Nope, no 8-day or 21-day important on Airbnb since it's so new. What? Okay, so Airbnb, I even like it for, if you want to hold Airbnb for 3 to 5 years, I think 154.50 is a perfect entry. I don't think it stays down here very long. And if you want to be super safe, I would say you'd wait till the bottom of this channel, even though it might never get to 130 again. It might. In a market dump, it might get to 130. So super safe entry. Super safe first entry is 130. Aggressive first entry is 154.50. And then always you have the other two entries just in case you're wrong about your first one. You can average down, you can DCA into it. Airbnb is a solid company. I don't see how they fail over the long term. Another one I like, Zim. I don't know if you guys are interested because I was buying here at $20. I added on a retest of 47. So my average sits around 37 bucks. If you want Zim now, aggressive first entry would be this top line at 47.50. Aggressive entry at 47.50. These are first entries I'm talking about. And the safer entry would be at the 21 day, which is at 43.30. So these are all first entries. Second entries, we wait for the dip and we wait for a clear bottom, which would probably be on Zim, this bottom right here at 33 something. 33 something would probably be my second entry. And the third entry, I would wait in case I'm wrong and it comes down more, I would DCA in some more. So that's Zim. Dawkin, this one is crazy strong. So this one is very, very hard. I really want to get into it, but in a market crash, this one is going to come down very, very fast. 21 days at 55 bucks. I know right now it looks like it'll never come down to 55 bucks. It's almost double that, but that's where I would enter. And if I don't get it, I don't get it. I have 10 other strong companies on my list that I wouldn't mind getting into. $55 first entry. Second entry would be a little bit lower than that. And the last one I want to go over as one of my favorites is CrowdStrike. Obviously, I told you guys cybersecurity is going to be massive in the future, in my opinion, one of the biggest growing companies ever. CrowdStrike, if you can believe it, I was in here at 60 bucks. I sold here at 100 bucks. Thought I was a genius. I got my $40 and dipped. And now it's trading at 264. So equity plays, that's just proof. Sometimes you need to hold them for your whole time horizon. All right. So if I knew how strong cybersecurity was going to be back here when I bought it at 60 bucks, I would have held this thing for the rest of my life. Unfortunately, I didn't. So let's look at the 50-day moving average as our first entry. Since it's such a strong stock, I would buy it at 211. CrowdStrike 211 would be my first entry. And PayPal, I don't think anyone has it on their list. PayPal, I think Ricky likes Square better. And I'm going to throw this over to Ricky. If you have any questions for me, just type in the Discord. Ricky will be going over his favorite stocks and what entries he likes for them. And you guys can see the difference in our styles and see whatever you like, whatever you guys want to follow it. Thank you, guys. Stop my shit.
Hi guys, I'll quickly go over some of the stocks I have. LB mainly covered the main points. When choosing a certain equity. Please. Thank you. I'll just share my screen here quickly with you guys. All right, please let me know that you can see my screen. Perfect. Where's my chat? Right there. Awesome. All right, guys. So I'll be, like he said, he's more into growth names. I do like growth names as well, but the only thing is, for long-term equities, I just like putting money into the companies which I use a lot personally and which I know that my money is safe. Tomorrow, if a crash comes or a recession comes, I'm okay holding through those companies. I'm not too worried, right? And so that's why I do my equity. Some of the names I get in when I know a company is solid, I just go in heavy and I just leave it. Like I'm not worried. Amazon, I have it from way before. Uber, I have it like from 11 bucks and then 30 bucks. Many other equities I have from small names. I don't look at them because they're for me, they're for 20, 30 years, right? But some names that I was going over today, looking at some compound growth. So now there are two companies, Teladoc right now. I won't go over the charts right now. Technicals, LB just went over. Any technicals on the charts, you guys can ask me during pre-market or leave it in Discord, right? Because then it'll be more of a charting session. But here, I just want to give you guys some numbers on these companies. Now, TDoc has a growth rate of, now there's something called CAGR. CAGR. What is CAGR? Is compound. Yep, compound annual growth rate. Okay. So some numbers that I was looking at today. So compound annual growth rate. Now, what does the word compound mean? First of all, if the first year, you guys should all know this, but if you don't, I'll just quickly go over. If my growth is 10%, just an example, on $100 worth, after 1 year, my growth will be 110, 10% on 100, right? And then 10% of 110 now, how much is that? That's $11. So my total will be 110 plus 11, which is 121. Okay, and then 121 times 110 the following year, and so on and so on. Okay, so your annual increase of 10%, the number keeps increasing. Okay, and one day eventually that 10% will be bigger than your principal. Okay, so that's what compounding is. Now, in some of the industries I was looking at, telehealth has TDoc and AMWL. Their projected CAGR is 29%. Okay, amazing growth. Now, this number 29%, that's huge. So if you were to put $100 in there, you're looking at about $29 increase in 1 year. The only thing with this is, like LB already went over, with these names, they're extremely volatile. When a correction comes or when they drop huge, right? A lot of people bought Teladoc here at 300, but now the equity is at 136. The question is, how long does it take before it gets here? Or does it even come back all the way right here, 81? Who knows, right? This stock went from 20 bucks just a few years back to 300. So when they run a lot, but when they fall like there's no tomorrow. Okay. So with these names, you have to be very careful. It comes down to managing, and you have to know when the money rotation happens, when people are buying these stocks. Okay. So two names here. You guys can write this down. Now I do like TDoc long, but the only question is how much money do you put in, right? If I have $10,000, if I have $100,000, and I'm buying an equity in Amazon, I will probably put in $10,000. But in a stock like TDoc, I will not put in more than 1,000 bucks. Right? That's the difference between Amazon and TDoc. Because Amazon, I know at least there's growth, something's happening. Maybe the growth will be slower now because it's ran for so many years, but at least my money is safe there. Right? Here, if I put in 10K, it can be 30K within 1 year, but then that 10K can also be 3K. Okay, so it all depends how you shift your funds. That's what it all comes down to. So TDoc and AMWL are like 29% CAGR. And then in the cannabis sector, we have IIPR and we have Curl F. This chart we have CURLF, right? This chart we have, then we have Tilray. I'll just write these names down for the cannabis sector, the ones I like, right? And we do have some news coming up. So TLRY, IIPR, Curl F. Their growth rate is 20%. Personally, I don't follow these two names, IIPR, Curl F. I don't follow, but these are names that I crossed today when I was doing some research. But if you're into these names, you know that these names. So 20% is the expected annual growth rate on these compound. The thing here now is you need to understand Tilray. From 20 bucks, this name went all the way where? 150 bucks. Now imagine buying this name in 2018, anywhere above 82 or something, and getting caught here, and then trying to buy the dip when cannabis sector was completely hot. People thought things were going to happen, but what happened the following years? Boom! It even went all the way down to $5. Okay, and now it's trading at 10 bucks. When do these people break even, if they ever do? This year, next year, in 5 years, 10 years? So that's the thing when you're playing certain names versus certain safe names. Stocks like Pepsi, Coke, I don't have a lot of money in those, very little, right? But I'm more into tech names, which are safer, right? But those are obviously safe names if you have a lot of money because they pay a safe dividend and your money is just safe sitting there. Okay, they've been in the market for like 50, 70, 80 years. Their balance sheets are very solid. They've got a lot of money on their names. And then obviously brand value is just crazy. And then PLTR, Snow, LB already went over, I believe, right? This sector. So PLTR there, I'll just give you their number if you guys want to write this down. Their compound annual growth rate is 25%, right? For PLTR and Snow. Okay, so PLTR, there's nothing I can add to this. I'll be explaining it beautifully in the session. So PLTR and Snow, their compound annual growth rate is 25%. But PL I think will outnumber this. It'll go much higher in my opinion from what we know for the next 1-2 years. Even here, it's a great place to add. I believe if you're long, you can always scale in like he broke it down in numbers, right? You can always scale in here because it might never come down from here. I don't know, there's these levels based on the monthly. You can just continue going up. So this is a very solid company if you go look at their numbers and what they're doing. And then we have the sports betting teams. Sports betting, I like DKNG. I like DKNG and Penn. Their CAGR is 15%. And obviously, I think is much higher than 15 in my opinion. I think these companies have a long way to go. But again, the only thing is, if you have money, how much money do you really put into these companies, right? It can come down to 40 fast, which is a drop of about 33%, or it can go to 100 fast as well, which is a growth of almost more than 50%, right? But DKNG and Penn, both solid companies, I think, for the long term. So whatever money you put in today, it depends how much you put in, right? Here, I would not go in full size, obviously. I would probably, if I want to put in the 1K into this name, right? I will probably put in, I'll start with maybe 400 and keep that $600 for another 3 months. I want to see what it does for the next 3 months. And then you slowly scale in, right? An example is, how do you buy equity first of all, right? So LB explained you a few things, but I'll just give another strategy that you can do. So if you have a 10K, you want to put in, for example, DKNG. How do you buy? Do you buy all at once on the dip, or do you want to get the best average throughout the year? So what you can do is every quarter, every 3 months, or every 30 days, or every month, for an example, you put in a little bit of these funds. Let's say you split this 10K into 1 year, and you think after 1 year, DKNG is going to grow, and there's a lot of growth that's going to come in. So here's what you do. So 10K, you simply divide 10K maybe by 6, or let's say 5 in the year. So 2K. So you add DKNG 5 times this year, 2K each, maybe every 2 months. That way, what happens is, so let's go on a DKNG monthly chart. Right, let's say you're buying DKNG, instead of putting 10K all the way here, instead of, then you, let's look at the worst case scenario. Instead of putting all your money right here, you bought 2K worth here, but then you got the dip, you put 2K right here, right? Then you put 2K right here, and then you put 2K right here again, and then you put 2K right here. That basically what happens is give you the best average on equity, and you're likely to stay break even or much higher. If the stock keeps going up, you get a much better price. And if the stock was to dip all the way here, but you still believe it's a great company, then you know what? You would have had a chance to buy DKNG here too to bring your average down. So equity, sometimes you just buy a little bit each, every 2-3 months, or every 6 months, depending on how much money you're putting in. Right? Amazon, for example, a name like Amazon, I would probably buy equity every 6 months. Okay, not every month or 2 months, every 6 months. Okay, you catch the best average. And then we have cybersecurity. LB already went over, but I'll just give you the CAGRs on these. Great name, cybersecurity. Their CAGR is 15%. I'll just write it down here. So, Proud and FireEye. I love FireEye, but then I hate FireEye because it freaking doesn't move. I mean, you just have to sit on this equity. Eventually, one day it will pop. I mean, it's a great company, don't get me wrong, but you just have to be very consistent holding it. It requires a lot of patience. Okay. And then robotics, we have ISRG. LB knows this company inside out, right? I don't know much about it, but it's not my sector, but I do know what they do with the robotics of everything that's coming up with their thing. I will do more research on these sectors, but to give you their CAGR, this and path. So this is ISRG and then path. And I'll just call LB over to explain ISRG in a little details. I think it's a great company. He'll just explain it better than me on this because he's done a lot on it.
ISRG, well, it is a very good surgical company. They actually do elective surgeries right now. They're taking a little bit of a hit just because of COVID. There's so many COVID cases, all the hospitals are full, so they're canceling elective surgeries. But once they get the number of COVID cases down, I'm sure the elective surgery will pick up. And actually, ISRG has a shareholder meeting next, I think this month. Very soon they have a shareholder meeting. They're going to split their shares, I believe. And just look into that. But it is a very, very good company, this one. And Intuit, ILMN is another good one. And they're solid. Healthcare isn't going anywhere.
So there you go. So this company can even see 2,000, 3,000. They're successful at what they're doing. But obviously I would not buy here. If you have 10K cash, I would probably buy a small scale in here, because I'm pretty sure in the future this will give a dip towards 700, 800, unless they have some approvals coming up, and if they're approved, then obviously this can fly through. Okay. And then some other names I like, Square. I love Square for long term. I think especially when Bitcoin's involved and the payment transaction, I think a lot more money is to be made in these names. This is like an early, you can say Amazon type of move, right? In the next 10 years, I do see Square above 2000. I do see this actually going 6, 7x, to be honest, right? Then we have PayPal. I love PayPal, but I would wait for a dip. Same with Square. If you guys get a dip, that's when I would add. But these companies can obviously keep on going and keep on going. Okay, right now it's in a nice monthly uptrend. How high does it go? Let's see. Shopify, I love. Instead of putting money in Amazon, I do agree with Amazon. I have it from the lows, so it's a different story. But I'd rather put money in Shop and Melly. So from 10K, maybe I'll buy 1 share of Amazon. I'll buy 3 Shop and 3 Melly, and just leave it. Just leave these names, right? And if you're smart, if you know how to do your numbers, you get 70% margin on these equities. Now, this is for professional traders. Obviously, I don't recommend this if you're new or if you're 1 year, 2 years in the market. I definitely don't recommend this. Basically, what this means is if you have 10K cash, 10K worth of blue chip equities, you get 70% margin. What does that mean? That means your broker will allow you $7,000 margin power, or also known as sometimes they call it maintenance. It depends how your broker names is maintenance access. I wonder if I spelled it. Yeah. Okay. Now, if this equity, for example, let's say the equity is here, tomorrow this equity grows from 10K to let's say 13K. You know, this your maintenance access margin power also starts going up. It's always 70% of your net worth on the equity. It's always, I mean, it depends on your broker. They might, it depends how much they're giving, but usually 70 is the norm. This 7,000 will also be higher. You can use this $7,000 to do some day trading on other equities and whatnot. Okay, this 7,000 you can also use to buy more equities, right? Which then gives you 70% of that. So that's it's a little tricky. It's a little tricky understanding this. Sometimes when you have certain number of, if you have $10,000, if you're, I'm just giving you a little tip. I'm not gonna go too much details into this because if you're new, I do not wish to teach you this, but just to give you an idea. Sometimes when you have money, you can borrow more money against it while that money is also growing in the markets. Okay, that's the reason how I started big off this when I realized like Amazon equity that I own. I mean, I don't use my margin power that much. Sometimes, only sometimes when I have a gut feeling and I know something big is about to happen in the market, I'll use it. But in the market offers you many ways to make money. Now stocks don't offer you leverage, but they do offer you margin. In crypto, you get leverage 1x, 10x, 20x, 100x, right? But those I consider very risky for a new trader if they don't know how to trade. But on equities, look into margin powers. If you're good with numbers, you have no emotions involved, and you're professionally, you want to trade, and you can be a robot in the market, you can do wonders with this money. While your equity grows, you can use margin power to build your account. Right? When I bought Amazon equity up first, when I put in, I have about $25,000 in it. Right now, it's worth much more. I used a lot of margin power from this because I knew from my trading experience. This I'm talking about a few years back. And that money, I was also able to triple on the margin power. So my gains were much, much higher at the end. Okay. So this is just a little trick I'm giving you. Look into this, how it works. If you don't know how it works, we'll do a proper session on this and we'll go in much more details. And Coinbase, I like, as long as crypto, Bitcoin, if you're bullish and you think we fly higher in crypto world, coin can see a huge move. This stock can definitely go to 1,000 and plus more in the coming years. But again, expect big downside as well if tomorrow crypto crashes, right? Or if new regulations come in. So very risky stock, but I would start scaling in now into coin, and I am gonna start buying equity on coin. I will probably give my alert out sometime this month or maybe next month. I'm gonna add in my first coin equity for the, I'm gonna be in it for long term, not for 1-2 years. This is like a 10-20 year thing, and maybe I'll sell it, who knows, much before that, I don't know. But my first scale in will be in coin on this month or next month. Okay, a very small scale in, and then I will keep scaling in every 2-3 months to get the best average. Apple, I mean, eyes closed, you buy a little bit every month. You don't have to buy it. This is another equity name which you just buy every few months. You don't have to buy all at once. You just buy every few months because Apple always gives dips. Apple always gives dips to buy. Okay. Lately, for many years, we have not gotten any big dip except the pandemic, right? Except the pandemic. But sometimes Apple does fall 50% every few years, right? So if you see an Apple drop towards 120, 110, I mean, you can always scale in. Okay. And like LB said, just leave some limit orders if you have that cash lying around, and why not, right? And what else we have? 5 more minutes and then we'll end the session because I think I'll be doing a great job. I just gave you guys some tips on the numbers, stocks, and so Costco, Apple, Waste Management, these companies have advantage over their competitors. Google, Nvidia, Facebook has very strong balance sheets, right? And strong names, obviously for I made a list. Let me just find it on my phone. I have it here. And if you want high rate of return, then Starbucks is doing good. Domino's Pizza, Home Depot, they're doing good. If you're looking for great management companies, then we have CMG, Microsoft, Adobe. So all these companies are categorized. But if you do some more research on these, you'll see. And I think that's pretty much it. I'll be covering the main part and some other numbers for you guys on certain equities. And CRM is a great stock. Cool guys, Ricky, I just go along on it. And right now we do have an appointment at 8:15 here, guys. We're 1 hour behind the EST time, and so we have to go. But I hope this session made some sense. 1 hour. Rewatch it if you need to. And if you guys want to know more equities, then we can do more research on certain other names and go over them, right? But more than that, it was more about allocating your funds into equities. I think if you guys understand that, that's the main point, right? Always look at the companies that are around you, that have been around you, which are doing great, right? McDonald's, Walmart, these are the companies which are not going to go nowhere. Okay, and sometimes if you catch them on the dips, they do have big rips. I mean, Apple, for example, look at the rip it had from 56 to 148. That's a 200% increase, right? Much higher than many growth names that went up and now they're down. Okay, but this company is solid, it held. And don't be surprised tomorrow if it gives a dip, or even from 158 in 3 years, it can even go to 300. Okay. I'm not saying it's going to, but these companies also rip. Now, Amazon right now, I'll give you guys a hint. If it does take out 37.25, I'm telling you guys right now, this will probably run much more than some growth companies out there, right? And 2020, it doubled almost in a few months. Okay, and if it takes out the 37.25, if this flag stands out true, the next measured move is towards 5K. All right, in a company like Amazon. So just pay attention to this if it does break out. And if it dips, no worries. You can always buy more at a lower price at the 50 MA or 200 MA. Okay. Thank you guys. We're gonna end this session here, and we'll see you guys for pre-market.